Hey folks, welcome to another episode from Charting Star. I'm Joe. It's Saturday, it's the 7th of January, and we're going to have a look at the DAX, the S&P 500, the Nasdaq, and the Dow Jones. This week was another outstanding outperformance from the DAX compared to the US markets. I think on a Wednesday or Thursday I was twittering, I rather keep my hands off. I'm rather staying flat because that strength is not really what I was expecting. Yeah, I tried a couple of shorts and the entries were actually quite well. Um, well, they dropped for 80 or up to 100, 120 points, but then the market always turned around and I got stopped out on entry. So just took little profits, but I was actually going for a bigger move, which didn't occur. So let's hop right into the charts. And at the DAX we have this is my level chart here, you see. And on Wednesday I was saying that 155 breakout level we had from that impulse here. DAX just broke through there and reconfirmed that level on the, I think this is an hourly chart based on the cash market. On the 5-minute chart you could even see it better. And even after hours he was confirming that level several times and was building a strong support here. And he did pretty much the same on Thursday and on Friday with that 400 level, 14,400 level. He jumped on it once, twice, the third and fourth time on Friday, and then with the US markets after that data came out, he just started to rally with the US markets. So latest here I tried a short at the 14,500 I think 3 times, and I got stopped out 3 times there again. So then I realized he wants to go higher. And he's actually basically after hours, he is already at that high here. We made in mid-December at 14,670. I think he jumped even a bit higher than that. And I was even mentioning that negative divergence here we had on the cash chart, which is usually a very good trial to go short, but I think on Monday we will take that divergence out as well, if he maintains that strength. And one thing to mention, I think it was this gap here. It was the quarterly close at 39.22. That was the monthly close, the quarterly close, and DAX left quite a large gap behind from that was the weekend before New Year's Eve. That's actually very rare. So I think in the near future we will close it, but I don't think we are done up there. And we hop into a 4-hour time frame, and I was twittering this chart I think just before Christmas. This was not my preferred scenario. It was more my alternative, where we had a so-called expanded flat as wave 4. When I zoom out, you know what I mean. I was saying this one here, the first move we had from late September, that was wave 1, wave 2, and then we had a large wave 3 into the beginning of December, and then that expanded flat correction started as wave 4, which is quite complex. We had an ABC down as wave A, an ABC up as wave B. We overshot that high, and then we came down from mid-December in this 5-wave or 5-leg impulse, 1, 2, 3, 4, 5, to finish off that 4 as an ABC. And now, as things look like, we are in our last wave 5, and this seems to be wave 1 here, that first little leg, and then we had actually a quite nice, it could be seen as a bullish flag, a nice A, B, C as a B, and then final leg C to finish off that A, B, C correction as a 2. And yeah, latest by Wednesday when we had that push. Now that was the Monday push. Get a little confused here. That was the 30th of December, so that was before New Year's Eve. Latest by that push we had, I think, during the night on Monday morning when the US markets were closed. That gave us already a little hint that this one is an impulse. And I was actually I was favoring that this one here is our first impulse to the downside, and we run in an A, B with a large C to the upside as a 2. But this is not going to happen anymore since we took out that high. And I was re-mentioning this pattern at the, I think on Tuesday it was. And now, once you have a look at the inner structure, there's 2 different ways how to count that. I'm pretty sure this one here is 1, and now this 3 has a lot of subwaves, which is very typical. And we're also starting with intraday gaps right in between. And that is also a very typical behavior for a wave 3. However, wave 3 could have been done already by Friday because it hits 100% target of that little subwave of wave 3. So that could be done, but it could even extend all the way up to 14,760 or 18,835 to finish off that last wave 5 in wave 3. And then there should be a wave 4. I think it's coming a bit deeper to that 400 level. And then we run up on our final leg. I want to touch that 4, yes. And then we could run up to our final leg 5 out of wave 5, the big one, to finish off somewhere here in that 15,000 or even higher. I will show you on the weekly that we could even run into that 15,400, 500 area to finish off wave 5. The daily, by the way, I was showing you that descending broadening wedge, which got us starting point here at mid-August, and it fired off, and there's still an open statistical target at 14,750 and the 100% target at 14,105, and that fits actually quite well to that count I was just showing you on the H4 time frame. And this is another expanding flat, which is much bigger, and it's starting actually here where we made that low in March. I was showing that on my last video. I think we had which is seen as a large A, B, C correction, which could extend to the maximum of 15,885. Why is it called an expanding flat? It has to overtake or overshoot this high here at 14,925, which was leg A. And usually these expanding flats, they consist out of 2 ABCs. So this is an ABC to the upside and ABC to the downside, which consist out of little zigzags in here and ABCs in here, and then there is a 5-leg structure to the upside, which can be quite impulsive. And so this one here is still on, and to finish off wave C, this is very important. This is a daily time frame, by the way. There has to be an RSI divergence, which is required to finish wave C, and I was written that down here as well. So keep that in mind. That scenario is still on, and I got another one, and we switch to the weekly now. A so-called bearish cyber. Give me a second. I will put this chart here on Twitter later on because it gives you that little sample of a bearish cyber pattern. Here on the left bottom corner, it gives you all the Fibonacci requirements you need. But let's hop back into my charting program. So what you need is a high, which is our all-time high marked with the letter X. And then you run all the way down to that March low, and you mark this one as a letter A. And the first requirement is for letter B that you need to retrace 61.8% of that first leg down, which we did. And then the next leg, BC, the requirement is to hit at least 113%, but not more, I think, than 138. I have to look it up later on, but of the leg A, B. So that matters well. He has 100, he has a 127 too. So we met that requirement as well. And then we need to run up to letter D. And for D, the absolute minimum requirement is to hit the 78.6 of the whole leg down from X to C. And that is exactly at 15,342. And to make it nice, from B to C, the expansion, the minimum should be 127.2 at 15,758, but I rather take the 78.6% of the leg X to D. I have to say I'm not really that familiar with harmonics, because I found out one day that they are more useful for Forex, but yeah, we just give it a go here, because these numbers, they fit quite well into our count from Elliott, and also that target range here we had from that descending bordering wedge. That's why I'm coming up with that as well. And yeah, while having a look at the cycles, I marked this one here as a half cycle top, and it looks like that we made a half cycle bottom here. Now, in the week of it was Christmas, all right, just before Christmas, and we are running now on our second half primary cycle all the way up. And this one here, and as I mentioned, we took out already the high from mid-December on Friday after hours, so it's not going to be a left-hand transition anymore. So this means that whole cycle here, that primary cycle, seems to be bullish. And then usually they run for at least 16 weeks with new highs, which means this is 11, 12, 13, 14, 15, 16. There should be at least another 2 weeks with new highs, which also fits into our pattern strategy we had. I was showing you earlier. So yeah, that's about the long-term cycles and the DAX. So let's continue with the Dow Jones, and the Dow is pretty much acting as the DAX for the last 2 months, except that the DAX is already at this high here already, and even the Dow is lagging now behind the DAX. And we have pretty much the same structure to the downside. In the cash market, the Dow didn't make a new low over here. So on the futures, we actually can count this as a 1, 2, 3, 4, 5. On the cash market, he made a double bottom at the 32,575 area. And on Thursday, I gave you that blue range. He's in since Christmas, and this range will break, I said. And we just need to be patient to what side. And usually they do a faker to the opposite. So that actually occurred on Thursday. There was that faker to the downside, and then we gapped up with that data which came out on Friday just before opening, and then we popped out to the upside. And if we duplicate that blue range to the upside now, we should hit at least at 61.8 at 33,895, or even close that gap from December 5th. Teens. And here the possibility is still on that this was a 1 and we are running up in a 2, and usually these 2s like to overperform as well, which means they run usually higher than everyone expects. So so they like to go even to the next retracement, the 78 or 76 or even the 88 before that most intense or strongest wave leg 3 starts to the downside. And we have pretty much the same in the S&P. it's just looking a bit weaker. The Dow Jones is at the 50% retracement already. The S&P is at the 38.2 where it stopped on Friday. It's also 1 hour time frame, but this indication is based on the futures here. So we have a clean 5-wave structure to the downside as well. And I still count this as wave 1. We made a nice cycle low here just before Christmas, and we made another cycle low. We basically just moved sideways in that triangle, but this one here qualifies as a cycle low as well. And once we move to the right, the next cycle low is due 19th of January. So we could see now this rally into mid or end of next week. And as long as we don't take out that high, this qualifies here as still as a wave 2. So same scenario as in the Dow Jones, but different story in the DAX. And we have basically the same for the NASDAQ. And so the same leg to the downside. The NASDAQ is, by the way, the weakest for the whole 2022. And we couldn't even get above that 23.6 retracement. So, and I was giving you that path actually just before Christmas, on New Year's Eve, I think it was. I said there is a cycle low, this time frame here where we should bottom, and we did, and now we actually came up exactly as predicted. And the timing is quite well, but the price is a bit off here. We came down quite low to make a double bottom here, and now we should run up in wave 2 as well. As I said, the NASDAQ is the weakest, but this is caused, you probably heard of it, of Tesla and Apple. But once they start these counter rallies, this wave 2 here could run even higher. So just keep that in mind. And once I zoom out here a bit, there's this weird looking Wolf of Wave wedge here, that red one. And once we zoom in, have a look where we stopped on Friday, right at that lower trend line. So my bias is that we take out that trend line and run higher and hit that green line here to set wave 2 before we come down. But let's wait for next week. That's about it I got for you. Yeah, so don't get annoyed by these markets, and sometimes it's just better to do nothing and just watch the markets. And I know it's the hardest trade to do nothing, but that is another story about discipline. But keep in mind also that volatility, it's crashing down way too fast. Volatility is coming back, believe me that, and especially in this first quarter of the year, there is usually a crash at the beginning, and I was mentioning also that on Twitter, especially DAG, there's an 80% correlation that he rallies in the first 2 weeks of the month for a couple of days, and there's usually this gap rallies, and while the VDAX, which is the volatility index of the DAX, so it's the VIX of the DAX, that usually gets crushed by a lot. And we saw these minus 5-6% of the volatility last week. And then out of a sudden, it's reversing really, really sharply. So be aware of that. Volatility will come back. Even by statistics, and especially in the month of end January, February, and March, volatility will pick up a lot. As I mentioned, keep that in mind. I wish you all the best for next week, and we see each other on Twitter. Have a nice weekend. Thanks.